Good morning, master traders and money magnets. I wanted to make a quick video for you guys talking about the SPY, giving you guys a quick recap and what's the plan for the next day. Make sure you guys are subscribed and turn on the notification bell because Uncle Charters will drop a pre-market video in the morning. So wake up with Uncle Charters in the morning to get ready to trade the stock market. Okay, but that's in the morning. Right now, I just wanted to cover the SPY and talk about this nice little bounce that we had here. You guys can see on the daily chart, we have a nice, beautiful green candle here. The market makers, well, they did not break that 575 level. They did drop below it intraday, but eventually bounced back to the upside, closing just below my 23.6 fib level, which is around 583.3. Did not quite recapture it, so we did not get the official false breakdown setup, but we did get a nice little bounce. Are we bullish yet? Are we bullish again? Not quite just yet, guys, because you look at what happened. You guys see that red line? That's my 5 daily moving average. If you are a long-time listener or viewer of Uncle Charters' YouTube channel, you know that Uncle Charters love the 5 daily moving average, and a lot of times when the market or when the ticker symbol is really bearish, it spends a lot of time below the 5 daily moving average. And today we back tested the 5 daily moving average as a resistant level, and we did get some selling pressure there. So because of the way the price action is right now, did not recapture 583.3, did not close back above the 5 daily moving average. To me, it's still overall bearish, although we did get a nice tradable bounce intraday here. If we take a look at the 15-minute chart, that's usually the lowest time frame I would go to trade level to level style, of course. You guys see this chop that we had in the morning. All right, I had a 577 level. We cleared 577, smashed the next target at 578.5, rejected from 578.5, broke down 577.5 and smashed the level at 575, bounced from there, went back up and hit 578.5. Actually went a little higher than that before rejecting again, dropping back down to that 575 level. And then this is where it got interesting, because in the morning it was choppy, it was range bound from one level to the next level. This is why level to level is so important. But once we broke down that 575 level, this is where the trap began, because in the morning SPY was range bound, and then we finally broke down the bottom of the chop range, which is at 575, broke it down on the 15-minute chart, gave us a decent level to level move down to 573. You guys see why Uncle always talk about trading it level to level, because we don't fully know what the market's going to do. So to play it safe, we play it level to level, and if we want to play for a potential bigger move, we leave runners. But you guys can see why level to level is so important. But once it hit that 573-ish level, here's where the trap began, when we recaptured the 575 level. False breakdown setup. The 11 o'clock candle closed below 575. 11:45 candle closed back above it, recapturing it. False breakdown setup. Cleared 577 as well, which put 578.5 and 580 in play. We chopped a little bit, but overall it just bounced. 578.5 held. We cleared 580, and it gave us a beautiful bounce. Just all the bear bias traders got smashed today, and this is just a reminder, guys, that this market is ran by the market makers, and they're going to do what they want to do with the price action. It's on us to follow it unbiasedly if we want to make money. If you missed this move because you were trading bear biasly, you know, it's a lesson to be learned there, because there was a lot of money to be made. If you trade it like a sheep, upside, downside, it doesn't matter as long as we get a green P&L at the end of the day. All right. Now that was day trading. That's the short term. Like I said earlier, it's still not bullish. Okay. So if you are a bear, What you want to see is price continue to stay below the 583.3 level and continue to trade below the 5 daily moving average. A rejection, to trust a rejection from this level, now that we retested it, is to see a breakdown of support, 582 and 580, and of course 578.5, 577, and that critical 575 level. Now we had a few washes below that level, but no daily chart closed below, because if we did, it would be extremely bearish if that level is lost. All right, guys. Now, yes, we are still bearish. Despite that, volatility is here. You can make money to the upside, to the downside. Watch out for those traps. Very important we watch out for the traps, because the market cycles between two phases, the trend phase and the chop phase. And lately, we've been in a bearish trend phase, and we still are. However, after the trend phase comes the chop phase. And during the chop phase, that's when we get a lot of traps. That's where volatility starts to decrease a little bit. And the market is cooling down, building strength for the next leg. For that next trend phase, it could be a reversal or it could be a continuation of the overall trend. Now, I'm bringing up the chop phase because we have a situation here. Now, March 4th candle. The range of that candle with the low of 572.25 up to 585.39. You guys can see today's candle, 573 low up to 584.88. Today's range was within the range of yesterday's candle. That means we have ourselves an inside candle setup. And when inside candle setups start appearing, that's usually a sign of chop. Okay, the chop phase is usually different. It's always different. Some last longer than others. Some are shorter than others, obviously. I'm always hoping that it doesn't last that long. And with all the uncertainty in the market, the emotional market that we're in, I don't think the chop range will last too long. But if it does, remember to trade it level to level. And Uncle Charters will give you guys the range to watch. As far as levels to the upside, the top of the range, 583.3, of course, the fib level, and then 585. All right, if we can get above 585, Uncle Charters will be bullish in favor. We go retest the fib level at 588 or higher. All right, break of the top of this range could give us a relief bounce, a relief rally to the upside. All right, it would be bullish, in other words. Okay, now if we are to be bearish, like I said, stay below 583.3 and break down those support levels. For the bears to resume control of momentum, breaking down 575 in the bottom of the range around 572-ish would definitely guarantee, well, not guarantee, but close to it as possible, that the bears will resume control and more downside is incoming. All right, but overall, chop range is 572 up to 585.4. Okay, please write that down, guys. I'm going to say 585. From 572 up to 585. That's the top range, guys. All right? So that's all I have for you guys today. I'm just covering the SPY. Please subscribe. Please like the video. Turn on the notification bell so when I do drop a new video, and I will, first thing in the morning, you guys will be notified. All right? Thank you, guys. You guys are money magnets. Money flows to you guys easily and abundantly, and don't let nobody tell you guys any different. Be grateful for your success in advance and watch the miracles happen. Peace and love, guys. Peace.